Hey everyone, Catch 'em All Collectibles here. In today's video, I'm going to discuss broader market conditions, all this recession talk we hear, just kind of thinking out loud on my thoughts on where we stand with respect to the hobby and the broader markets. And none of this is financial advice. This is just some guy on YouTube sharing his thoughts. As with the rest of my channel, I like to be as transparent as possible. I don't tell anyone what to do. I just show people what I'm doing and kind of talk you through why I'm doing it and why I think the way I think. If that's interesting or useful to you, let me know in the comments below if you find this video interesting and if you'd like to see more videos along these lines, like just thoughts on the broader market. And I could probably go on for hours and hours, but I'll see what I can do to keep this to 10 to 20 minutes. Anyways, you can see here I've got the S&P 500 year-to-date performance. We're down 23.39%. I've got crypto performance year-to-date. Bitcoin's down 57.06%. Ethereum's down 71.39%. You've got all your other stuff down here. Some of the bit crazier ones like Doge. I don't know where SHIB's right there. You've got some key cards in the hobby. You've got your PSA 10 first edition Jungle Pikachu that peaked around $1,000 in November of 2020, has trickled all the way down to about $200, 170 to 200. Don't forget my video that came out last week. Pokemon cards do not have a singular market price. So when I say 170, 200, this Pikachu has a range that probably can vary anywhere between 120 and 220, depending on the day, the strength of the individual copy. Remember, Pokemon cards are not fungible, all that good stuff. But continuing on, we've got PSA 9 base unlimited Charizard, another stalwart of the hobby. Peaked at around the same time frame. This shows about $5,000. I definitely remember selling a few copies between $5,000 and $6,000. This is Pokedata.io. Does a great job showing historical prices of cards, but definitely misses some data points here and there, I'm pretty sure. And it doesn't grab all the platforms. I don't know exactly on the back end. I'm assuming most of what it pulls is from eBay. But anyways, $5,000-ish peak down to about a $1,300 value today. Bottomed out around 1,000. Again, if you look really close at completed listings, I'm sure some went below 1,000, and there's probably a range around 900 to, or say 800 to 1,500 on the card today, if I were to guess. Anyways, back to the S&P 500. The reason that I showed you what I showed you, almost everything's down. It's kind of a painful market to be in. A lot of negativity, a lot of bearishness, some bullishness though too. And yeah, I'm just going to share with you my thoughts. I do own significant amounts of everything shown, I guess, except for those two specific cards. I sold all my Pikachus and I sold all my, I do have a few Pikachus left that came back recently. I own one PSA 9 base unlimited Charizard for my personal collection. But yeah, 401ks, IRAs, I own the most substantial portion of my net worth, I guess, would be in S&P 500 and equivalent funds. Where I stand today, my sentiment, having dropped 23.39% year to date, doesn't feel amazing. There's no way to sugarcoat it. There's no way around that. But I'm 32 years old. I hopefully will live into my 80s. I think life expectancy these days is high 70s, low 80s. So hopefully I get a long, full life. I've got another nearly 50 years ahead of me. Not too concerning. The money that I save into this fund is entirely in IRAs and 401ks, tax sheltered accounts for the long term, saving for my future, the future of my family and all that. And I guess less family, because I mean, kids will be out of the house by then, hopefully, when I'm 70 or 80. So yeah, this is money that I have no need to access, no desire to access, no plan to access for many, many decades. And if we zoom out, I know it's hard to think further than 6 months before, but zooming out a year, we're still down 11.8%, still doesn't feel amazing. Zooming out 5 years though, it really puts it more into context. We've lost If you want to go 3674 is where we are today. If you want to find the last time we were at that number, very approximately December 2020. So we've erased about a year and a half worth of gains, if you look at it that from that perspective. And if you really zoom out, being 32, I went into the workforce in 2011. 2011 is about right here on this map, on this not map, chart. So this is where I started investing, dollar cost averaging, if you will, through payroll deduction in my retirement account, 401k, and then IRA. I opened the IRA a little bit later than I should have, probably a combination of Roth and traditional, depending on the year. I could make so many videos on finance. Personal finance is a real passion of mine, hobby of mine, just an interest, I guess. I love spreadsheets, and money and finances lend themselves very well to spreadsheets. So I meticulously track spending and forecast future growth of accounts and all that. But anyways, 11 years of just no timing the market, just buying every paycheck, a fixed percentage. Early on in my career, it was probably something like 5%. Mid-late career, I say mid-late career, 10 years I was at my company. I put in my 2-week notice right around my 10-year anniversary. So at the end, I was maxing out $19,500 per year. At the very beginning, I was probably putting in more like $5,000 to $6,000 a year. Maybe even, I might have been doing 5% for a few years before I did 10%. Anyways, overall, if I were to look at the actual inputs versus what I have, so massively far ahead. Even in spite of a 24% dip at the very tail end, so massively far ahead in the time that I've been in the market. It's really hard, especially now that I've left my company. It's harder to show and track all the data. What's been my cumulative rate of return since I've been there? I don't know that exact number. I guess if people are interested and they want me to really dive down deeper into like finance type videos, let me know in the comments and perhaps I could put more time into finding that. But yeah, I'm way up. It's only about a year, and the last 18 months of inputs that I've made are lower than when I put them in, but the prior 9 years before that are substantially up. The very first dollars that I put into my account were when the S&P 500 was 1,200, roughly, tripled. So every dollar I put in back then is now $3. Doing quite well. I mentioned it before. Check out my video. I think it was back in January. When you put money in the S&P 500 or an equivalent total stock market index fund, VT-SAX, VU for Vanguard is the S&P 500 index fund, you're betting on the future of humanity. You're betting on the productive output of millions and millions of workers and trillions of dollars of market cap. So no concerns there. My strategy when it comes to the S&P 500, every month, maxing out my 401k, every month, maxing out my IRA. And that plan is it's not changing now. It's not changing forever. 20 years from now, when I'm within a decade of retirement, I'll probably do the natural thing of like going more into bonds, less into stocks, or more into less risky type index type investments, as would be typically advised to you by a financial advisor, which, reminder, I am not one. So this is all just entertainment only. But yeah, that's kind of my thought and my feeling on where we are. A lot of panic. It could go a lot lower. If we drop 50% from here, I would have less reason to sell than I do today. And I have no reason to sell today because I'm not touching this money for 30 plus years. So it really, one thing I wanted to talk about, and I'll talk about it more with respect to Pokemon as well. It really blows my mind. It's easy to say, buy low, sell high. But what people's psyches, what people's minds tend to make them want to do is buy high and sell low. When people see the market at an all-time high, like when you're here, you're on top of the world. It's as high as it's ever been. Everyone's killing it. Everyone's been getting 10, 20% for a few years here. and you want to buy more because you feel like it's going to double again and double again and double again. Same thing if we go back to the Pikachu here. The rate at which I sold PSA 10 base first or PSA 10 jungle first Pikachus in this range from let's see, August when they were 230 to November when they were 1,000 almost. The rate at which I was able to sell those cards at successive all-time highs, people could not get enough. People would message me, ask how many I had, they'd buy them all. Same thing with the Charizard. Unfortunately, I only had like 4 or 5 that I sold in this swing, and I probably sold some of them down here and was very happy to do it. And then I did get a couple at or above 5,000. But it just blows my mind how if you liked it at 5,000, one, it was a little crazy to like it at 5,000 because if you look back further, and if you really look back further at where it had been, and if you had kept in mind how accessible it still was from opening packs, and even though it was a $30,000 box for a short window. But yeah, if you liked it at 5, if you liked it at 2,500, you should love it at 1,300. It's the same card. The pop is higher, but it shouldn't have been a surprise. You shouldn't have been blindly buying it, not realizing that the pop was going to go up substantially. It just kind of blows my mind though, how an item falls 80% and then people don't want anything to do with it. I can see, okay, I made the wrong choice. I could see some YouTuber sold me a false bag of goods. They told me we were going to the moon and whatever it may be. I'm not saying to go out and buy these because they're cheaper now. And I think these cards both have further room to fall. Part of the reason I showed them is they were some of the worst hit, over 80% in the past year and a half. And they could have further to go. 24% out of the S&P 500, that could have further to go too. But for the S&P 500 to fall 90%, it did, context, once, I believe, back in 1929, 1930 range, the Great Depression. So it has happened. Global depression, very terrible times. We're on the cusp of going into a recession. If the numbers come out for this quarter, early July, if they come out to be negative, we'll be in a recession technically. Whether or not we hit that, whether or not it continues over the next few years into a depression, who knows? But there could be a long way to fall on this. There could be a lot longer way to fall on this. I've talked about how Pokemon cards have no intrinsic value. There is intrinsic value in the S&P 500. Again, these are companies that have real estate. They own real estate. They produce goods. They have employees. They have cash. I mean, they have cash funds they're sitting on. If the number were to go too low for some of these companies, people would just buy the companies. Warren Buffett would step in. Berkshire Hathaway would just own the entire S&P 500. So kind of going to be all over the place. But like, I'm not saying panic. I'm not saying everything is going to go down, but it could. I mean, things could continue to go down from here. One thing that's a little bit concerning to me with respect to both the stock market and Pokemon cards is we've fallen so far, the bottom must be in, right? The stock market's fallen 40%, 50%, 60%, 90%. Things could get worse. The Pokemon cards that fell 80, 90% already, they could fall a lot further. I don't think Pokemon cards are Beanie Babies, but 99.9% of Beanie Babies fell greater than 99%. And I think some Pokemon cards are more akin to Beanie Babies than people would like to admit to or realize. Some of the examples where we had a few dollar raw card selling in a piece of plastic, of which there were millions printed. Millions of this card were printed. Hundreds of thousands, if not millions of this card were printed. Check out my video on Wednesday. I'm going to do kind of a print run discussion on how many cards we had printed over the past year versus the whole history. So yeah, it's kind of tying that in. Some of these cards were printed very extensively. PSA 10 or not, these prices got really silly back in 2020. And I guess let me get back on topic, back into like the Pokemon sphere. In 2021, I made a video. I purchased over $500,000 in Pokemon cards. I quit my job in 2021 to sell Pokemon cards full time. I'm trying to reel back in some of the negativity that I was spewing out there the last 5 or 10 minutes. So keep in context. I quit my job as a chemical engineer to do this full time. I clearly am comfortable with where Pokemon is and where I think it's headed over the longer term, but the short term, largely fueled by broader market performance and situations, could get a little ugly. What I'm trying to do is I'm trying to sell off the things that I think could and should continue down. This is one that could be. What you always need to look at, how available is the card raw, mint? How many more of them are potentially sealed to be opened? How many of them were produced total? Again, check out the video Wednesday where you can kind of work towards some of that data. Unfortunately, we don't get exact print runs from Pokemon, but enough data is there, especially for the ultra modern sets, to get a really decent idea on how many of these chase cards there are. So that's when we're talking ultra modern, or how many booster boxes might be produced. That'll be a fun video Wednesday. I'm actually going to record it right after this one, like right when I'm done. So, but yeah, 2021, I purchased over $500,000 of Pokemon cards. 2022, I'm on pace to purchase significantly more, but I'm also selling more. I'm a net remover of money from the hobby because I'm doing it full time and I have to save in the S&P 500. I have to pay my bills and all that, but I'm being cautious. I'm trying to have quite a bit of cash in case things continue down significantly further, both in the S&P 500, in crypto. I speculate in there. I've talked about it a little bit before. When I sold my trophy cards to Rusty, some amount of that did go into Bitcoin at 30,000. Not like a whole Bitcoin, fractions of a Bitcoin. And I've since lost 30% already in a week on that purchase. So the number 3 at PWCC sold for like $32,400. So the number 3 sold for less than I sold Rusty the number 4. So that I made the video on how Pokemon cards don't have a market price. I'd say that fell within the range of how Rusty and I valued it, close enough. But if you want to say that that dropped a few percent, all the S&P 500, all the Bitcoin that I bought in the meantime, that's down too. So the trophy's down, everything's down almost. But yeah, continuing through the year, I'm trying to be a little bit cautious. I'm trying to stay a little more cash rich, a little more liquid for if we continue down. And if we continue down, I want to be there ready to scoop up collections and cards. I'm continuing to do a lot of grading. I think people are still vastly overvaluing grading. I'm trying to not do as much at $30 per card. I only have a couple hundred cards to send to PSA at that rate. I am looking forward to a year or two from now, hopefully getting in at 20 down to 10. If the broader market conditions worsen from here, that might be expedited. If the card market continues down, that'll probably be expedited because the 10,000 cards I think I'll send at $15 a card might turn into 2,000 cards if the market 50% drops from here. So yeah, as I said, a bit all over the place. I could have turned this into a live and I could have just talked for like 3 hours, but I'm going to try to stay short of 3 hours here. Let me know in the comments below what your strategy is. There are certain things, if you look at my eBay, that are listed that I want to sell. There's good cards and there's bad cards. Every card is a good card at the right price. So even PSA 10 Jungle Pikachu, if those were $20 a piece, I would be buying them. They're $200 a piece, so I'm selling them. Every card has a good price. Every card has a bad price. And if the market price is a bad price that I think is going to go down from there, I'm selling everything that's too high and I'm buying everything that's too low. Primarily what I'm buying, I show everything I buy in my video. Well, I show most everything I buy in my videos. I'm buying a lot of modern sealed to flip just into the market, buying wholesale, selling retail. That's a pretty straightforward business. I'm also buying old collections at a fraction of market, some 50 to 80%, depending on what it is, depending on how we define market price, to just immediately flip to the market for a margin. And some of the things that I'm not selling are CGC 8 to CGC 9 WotC first edition hollows. A lot of those I want to optimize the slab. I want to crack a lot of those in the coming weeks. You'll see a video where I crack hundreds of CGC slabs to either be regraded at CGC because they might be grading easier. Check that video on Friday. And then Also, I have probably 200 or so cards to send in to PSA at $30 a piece. So that's my strategy with modern. That's my strategy with vintage. I think that covers everything. That covers everything I wanted to talk about. A bit ranty, a bit rambly. One last rant that I wanted to share. When people talk about Pokemon cards as if they are stocks, it really pains me. My personal finance brain, it just hurts. And I've talked about that before. I hear people talk about time in the market beats timing the market. Very much when it comes to the S&P 500, yes. So here's a little story from the Personal Finance Club website. 3 friends who all saved $200 per month, dollar cost oil, in an S&P 500 index fund, Tiffany, Brittany, and Sarah. They each saved and invested over a 40-year period from 1982 to 2022, and they had different strategies. Tiffany and Brittany knew the market would be volatile and planned to avoid the crashes. So they were trying to time the market, not just dollar cost average. Tiffany was really bad at it. So these 5 crashes were picked out by Personal Finance Club, and Tiffany saved $200 per month in a savings account, earning 3%, waiting for perfect times to invest. And she had the world's worst timing. She literally bought at the top before Black Tuesday, at the top before the Kuwait War, at the top in 1999 before the dot-com crash, top in 2020 before the COVID crash, 2008 financial crisis. And over time, her $96,000 invested still turned into $764,020. She had the worst timing in the world. She bought at every top. And that's how powerful the US economy was for her. She had terrible timing, but she still invested. Her first money went in the 1980s. She went in more in the 90s, 2000s, 2010s, and on. She turned 96 grand into 764,000. Brittany had the world's best timing. She bought at every bottom. So about a few months after Tiffany was buying, Brittany was buying for a fraction of the price, 33% cheaper, 20% cheaper, 56% cheaper than Tiffany did after the financial crisis. She turned her $200 per month, so her $96,000 over 40 years, into $1.128 million because she bought 5 times in this 40-year period with large amounts of money that she was waiting on the sidelines, waiting for that perfect time. Slow and steady Sarah, she was like doing what I did. She said, I have no idea what the market's going to do. I don't want to day trade in it. I don't want to time it. I just want to be in there. I believe in humanity. I believe in the powerhouse that is the US economy. I want to put in $200 from every paycheck into my IRA, 401k, whatever it may be, and never look at it, never sell, never step out of it, just continue plowing into it. She bought every month throughout this whole 40-year period, the highs, the lows, everywhere in between. Because so many of her dollars were in for so much longer, she was earning, like, she bought during this crash and before it. She bought during this crash and before it. But then she was also buying on the way up, on the way out of it, getting dividends the whole time over this 40-year period. So she made the most money, $1.366 million. This demonstrates why time in the market is important. This demonstrates like a historical comparison as to how you would have worked out investing these 3 ways. Pokemon cards do not work this way, though. When you buy a Jungle Pikachu, whether you buy it at 40 or 200 or 1,000, dividends are not being earned. That is not like compounding upon itself. When you buy it if you bought it at 50 and then it went to 1,000, you 20 extra money, and that's great. And you performed better than the S&P 500 over that time period that you 20x'd. But if you didn't sell at 1,000, you didn't realize the money. And if you've held, I guess what I'm trying to say is the S&P 500 could crash 50, 60% from its peak. And unless the world as we know it changes, unless humanity ceases to advance and exist, it will recover and it will continue on from where it was. It will reach new all-time highs down the line. That Pikachu may have reached its all-time high forever. It may never see 1,000 again. And a world 20 years from now could see the Pikachu being worth only $100, and the world as we know it would be pretty much the same place. Just Jungle Pikachu would be cheap. For the S&P 500 to be less than 3,600 20 years from now, the world, the country, the economy as we know it will have fundamentally changed, and life as we know it will be different. So yeah, I just wanted to point that out. Comparing stocks to Pokemon is really tough, and it's really hard to listen to and hear. They're both great. I transact passively in the stock market, dollar cost averaging, time in the market, and I am very active, literally a full-time job, thousands of hours a year, 2,080 hours a year. I'm actively flipping, speculating, and doing business in Pokemon. And I'm comfortable doing that today, but I'm definitely strategic about what I hold and what I sell. Sell quickly what you can replace quickly, sell slowly what you can never replace, may not replace. Sell quickly, Jungle Pikachu's at 1,000. Sell quickly anything that's too expensive or feels too expensive. A lot longer than I intended to go, I think. Let me know in the comments below what you think. Affiliate link down there. Like, subscribe if you enjoyed the content. Definitely let me know if you want more personal finance rants from not a financial advisor, just some guy who buys Pokemon cards and sells them full time. So yeah, check back later this week. Wednesday, I will be talking print runs, and Friday I will be talking, is CGC grading easier? So I appreciate you all watching, and I will catch you all later.